Oh, there we are. It is 12:30 and on the dot. I am live and hey, we've got we got Pulverizer on stream with a commentary on the thumbnail. Thank you, Pulverizer. Appreciate it. But hey, folks, welcome to the Tuesday live stream. And Today I want to talk about good news. Good news if you own any of our stocks. It looks like the long winter, a long bear market that began almost exactly 3 years ago. Yeah, just like that. Yeah, it seems like suddenly, hey, Tesla's going up. Bitcoin is, pretty close. I mean, it's above the old high. And yeah, it does look like, yeah, suddenly, people are interested and stocks are going to start to move up. At least that's what I believe. And that's what I am going to lay out: the why, the how, the when, point to some groups of stocks. Uh, Putting up the stocks underneath was popular last week. So I've done that work ahead of time. But before I do all of that, I got to go through all the usual things that I tell you before I begin the live stream, which is that this live stream and the content from ATG Digital Media is not investment or financial advice. It's presented as opinion, information, engagement, and most importantly, entertainment. Next, all ATG digital content can contain errors, oversights, and or mistakes. Understand that investment operations, what is that? Well, buying or selling a stock, crypto, option trades, all of that is investment operations, have significant risk and can lead to the loss of your principal. So think very, very carefully before you choose to do anything. Next, the owners, employees, contractors, own trade transacting securities are mentioned in this video, and all content from ATG Digital Media. Very quickly, free content, Substack, Ballman Speculating, and very quickly you'll see YouTube come up, which is what we're on at this moment. Social media. Oh, having trouble putting that up. Very active on X, usually using text. Check out my X. I did put up a video of the Tesla full self-driving, and maybe I can get that up and show some of it on here, because really the new self-driving is genuinely amazing. I mean, it has finally like arrived where like now it's like really very easy to see how robo taxis are going to happen from here. Paid subscriptions to ATG Digital Media, go to atgdigital.media to go there. Okay, I'll take that. Yeah, let me start with, let me try and get that up to begin with, and show some of that footage, because folks, yeah, this is genuinely amazing stuff. I mean, it wasn't the most difficult to drive, but nonetheless, I've been commenting about. So let me make sure that this shows up. Yeah, hey, so let me play this. I'll play the commentary in a recent expo that it drove me from my house to my yoga session, and I just finished a yoga session, and I'm going to make it drive me back. All right, so I'm just putting my home in, and yeah, you can see there it says tap to activate reverse. And actually, I'm going to flip it to go forward, and yeah, press to drive. And I'm going to press to drive, and I'm going to put this in auto driving. And yep, you can see out of the parking spot, it's going to navigate itself. You can see I'm getting a warning to pay attention to the road, because there is a camera here that can actually monitor what I'm doing. So so I have to, and you can see I'm not doing that. That's the car doing that, and it's steering by itself. It's made a right turn in the parking lot. Onto Shannon Road. And now we are reaching a intersection where it needs to make a left turn. Now, there's not many cars, but there is actually a car coming from the left, and it is hesitating for a second whether it should go because the other car hesitated. It decided ultimately that it was going to travel and go, and there is now a speed bump coming, and you will see that the car stops, pauses, I should say, and now we are going to be making a right onto Shannon Road. Right turn. So I'm going to turn these directions off. And then now you'll see that, yeah, the car is now making a right turn onto a regular road. I'm probably going to get some warnings from Tesla because you're supposed to keep your hands on the steering wheel, but you can see it just navigated through a light, feet, and right it's now going to reach a T intersection where it needs to make a right turn. It will, using cameras, right glance to the left and go forward. Now, one of the things that is not completely dialed in is whether or not it should turn right on red. Sometimes you have to give it a little bit of encouragement, so which I'm going to do by just tapping the accelerator, but there is a car coming to the left, which you can't see, but it's turning to the right, so it decides that it's going to go forward, and yep, and it's going to merge very rapidly from the merge lane into the right lane, and yeah, and that's where it's on. I'm on my way home. It's got to, you can see there's a car out to the right, so it's going to gently slow down just a tiny bit, which is maybe what more polite drivers might do. Other people might not do that, but yeah, it's I'm not doing anything. I just put my hand on the wheel just to give it a little bit of firmness, so that it knows that I'm still monitoring the car actively, and yeah, there's obviously no hands on the steering wheel for a second, but I've got my finger just sort of like pushing down gently in the left corner. I'm gonna turn the directions off again. And there is this is a left lane merge, which truthfully it doesn't do that great. This is one of the few things that, like, you know, it doesn't do great. You can see it's waiting kind of the last minute, and I'd prefer it go left, but it does it eventually. Obviously, if there was traffic, it might be forced to stop, or maybe it would respond by merging left earlier. Most of the times I've hit that, there's not been a problem. But that's something that personally I'd prefer if they dial it in to merge left. And yeah, so we're now obviously, we're about, I'd say about 40% of the way home. Now, this is not an incredibly complicated drive, but nonetheless, and you can see there's a car that just pulled in out of the left, and the car slows itself down, adjusts sort of like the way I might, just sort of like lifting my foot off the accelerator if I was driving. Maybe I would brake. I mean, that was a little bit of a sudden left turn, but the car saw that other, my car is called Olaf, so I actually going to refer to Olaf by name. Olaf saw the car come in from the left, and yeah, gave it room. And now we're about to go through a light, and then we're going to come to another T intersection where it has to kind of curve down and make a left turn. And you can see there it can go left or right here, and is following the directions. So it's going to go left. And the light is green, and generally speaking, the car is somewhat cautious in terms of, like, you know, getting really up and close next to a car, but we're going to the green. It's going to make a left turn here. And there's a kind of exciting left turn here where it needs to sort of like sit in an island area. Not quite an island. It's a very small, like, turn area, and you can see it's setting itself up to make this turn. And to give you a sense for like how small this is, and this is another place where it's a little bit cautious, and I sometimes want to give it, but you can see it's going to make a left turn, and yeah, there were no cars interrupting it in this case, but it's done this before with no cars. I'll just wait there and wait its turn until All right, I'm going to stop it there rather than just keep it going, which goes on for 3, 4 minutes. But I wanted to show that to you because there is a lot of excitement now about full self-driving, which when I have talked about it, people's like, Paul, yeah, Elon says a lot of things, but it's not going to happen. It'll never come in our lifetime. It's going to take another decade, another 20 years. Yeah, folks, but that version of full self-driving, which is 12.3, that drives pretty much like a cautious version of me. I'd probably go a little bit faster, take the turns a little bit quicker, probably aggressively merge into out of traveling lanes into other lanes. But generally speaking, this is already a very good driver that will take me from my house, from my driveway to my destination. I can literally put the destination in, press a button, and it goes. We can now start to count in full self-driving, robo taxis as a significant source of growth, revenue for Tesla. So it's kind of like no surprise, like, okay, like, what's going on in the stock market? Well, if I'm right, and my way of looking at the world is right, well, I mean, these clips of people like me being posted on, my guess is, yeah, I mean, obviously on X, previously Twitter, they're obviously showing up on Instagram, on Facebook. Yeah, it's starting to go around like, whoa, look at this. I mean, this is like unreal. This is like sci-fi. I mean, like a self-driving car. You can see, I mean, it's making judgment calls as to when to turn, when to hesitate, speed bumps, all of these things. Yeah, this is full self-driving. This is robo taxis. So we are what, in March of 2024, and this is the best version. And now this is like the most, demonstrable version of AI that we can see. It will be, I don't know, twice as good in 3 to 6 months, then 5 times as good in a year, 10 times as good in 18 months, 20 times as good in 2 years. Yeah, I mean, this project, essentially, you can run a timeline out. So when Elon talked about robo taxis, people laughed. When he talked about full self-driving, people laughed. And Elon often says, like, hey, I may be late, but I always deliver. And I can say, this tells you, yeah, you can tick that one. It's full self-driving, it's robo taxis. So no shock then, like today, hey, magically out of the blue, Tesla stock, yeah, up 5%. Yeah, why? Well, I mean, I imagine like, professional investors will be like, okay, well, what is the robo taxi opportunity worth? What is full self-driving worth? Well, full self-driving, if you simply attach it to whatever, 1.5 million cars, and I think their take rate is fairly small, but like, people are going to see this, and it's no different than anything else. Like, I mean, I remember the first time somebody told me about Uber, and I said, there's an app and you can call a car and you can see the car and you can all of that. And, the first time you're a little skeptical, but I mean, after you use it and then you're like, whoa, that experience is incredible. I mean, it's way better than standing outside my house, calling, be like, hey, where's the car? Where's the car? Instead, on your phone, you get to see the car moving. It's going to be that kind of an experience where initially people will be skeptical. People will be like, really, it can do this? And then like, yeah, I mean, nobody, thinks about Uber. It's just like everybody takes it for granted, just like that. In, something like 3 to 5 years, we're going to start to take self-driving cars for granted. I mean, that sounds crazy because of where we're coming from. But my experience, and I've used this version of full self-driving multiple times. The previous versions, when I would get on, inevitably, it just felt like, I didn't want to do it. Like the speed bumps, for example. I mean, there's a lot of speed bumps in residential areas. Wow, that was a pain. It would often take speed bumps at 25 miles an hour, which I was like, oh, that's just, and then I'd break off the full self-driving and not come back on. But when it's doing all of this for you, yeah, I can deal with a little bit of cautiousness. Yeah, I mean, because it's required to follow traffic rules to some extent. Like, for example, if there's a car in front of you, normally a human driver will pull right up to the stop sign and make the turn sort of in a roll, but they have to follow, NHTSA rules. So, they ought to stop. But hey, that cautiousness I can deal with as long as generally it's doing what is expected. So we're on our way now to two major business propositions for Tesla that people are like, this is never going to happen. It's just junk. It's like Elon hyping all this. Yeah, count full self-driving into, I'm going to guess, in 2024, 2025, as they deliver cars, 10 to 15, maybe 20% of people will start to take full self-driving. And as those people have good experiences and other people see that, it'll very rapidly become 30, 40, and 50, 60%. In other words, yeah, I mean, and this is software that is already written, right? So as people subscribe to this, yeah, I mean, this is just pure profit, right, for Tesla, right? I mean, the cars are being built anyway, right? And the software is already made anywhere. In other words, this is like, having, yeah, I mean, free money just start to show up. Yeah, it's cost a lot of money, but pretty much every single car from here, yeah, people are going to be like, do I want the car to be a robot and drive me? In other words, do you want an electronic chauffeur? Or do you want to put your hands on the wheel, be, on all the time like this, like, oh, or yeah, increasingly over time, have a much better driver that does everything for you. And many people will be skeptical, and that's all fair. However, I can also say that lots of folks are going to be like, you know what? This thing's great. I don't want to think about driving. Let it go. And then we've got the next step, which is robo taxis. In other words, where you have fleets of these just moving around, picking up people, dropping people off, taking people everywhere. That is going to be a complete revolutionary game changer. I believe that when Cathie Wood modeled the cost of robo taxis versus owning your own car, our cars mostly sit in our garages, in our driveways, in parking at our workplaces. The utility is somewhere between 4 and 6%. I mean, that's all that we really genuinely use it. So if you have robo-taxis, the utility goes to something like 60%, and the cost per mile goes from something like 40 or 50 cents down to like 4 to 6 cents. So yeah, this is going to transform transportation, personal transportation. Lots of trips that seem like, too expensive will become much cheaper, will change the world of transportation. But that's all, obviously, people's like, oh, Paul, that's all way out there. Most importantly, if you're a Tesla stock owner or you're considering going into Tesla, the key is that investors look forward, and the more confidence they have in the future that is coming, the more they're willing to sort of discount what is coming. And if you're discounting full self-driving, that by itself is my guess is like it's tens of billions of dollars of revenue. That's, going to be recurring, because I bought my car where I paid a one-time license, but a lot of people don't want to pay $6,000. So I believe it's something like $200 a month. So now you got recurring revenue that is starting to roll in, that is essentially pure profit. Full self-driving, so that's a big deal. Robo-taxis, we will going to start to see who and how this will roll out. Tesla clearly plans to be in the robo-taxi business, and effectively, for some period of time, could choose to have a monopoly. But I believe that they're going to sell, obviously, cars to anybody. And I believe Uber and Lyft and others are going to buy huge amounts of these cars and run them as robo-taxis. So you've got now all these layers of Tesla's business that are starting to just explode outward as a result of this, right? Full self-driving, which is software, it's another layer of revenue and profit, right? That's there. And you've got robo-taxis, which for Tesla, they will run it. They'll become a robo-taxi company. And now their sales of their EVs accelerate because people will start to want to run fleets of robo-taxis. And hey, nobody else has this. Nobody else has this. GM doesn't have it. Ford doesn't have it. Waymo doesn't have it. They all are built on geofence solutions. This is an artificial intelligence solution. The idea is you put this car down anywhere and it will figure out how to get you to your destination. If you go on YouTube, you go on X, you can see. I mean, I've seen a full self-driving 12.3 actually, where there was some diversion, ended up in like a dead end. It took a U-turn and re-navigated its way back. I mean, that's what a human driver would do if they took a wrong turn, or if they somehow navigated themselves to a place where they couldn't go any further. You'd have to turn around and figure out directions. In other words, this thing, it's not completely done, but for the most part, you're like, hey, you can see the future. It's coming straight at you. It may not be here tomorrow, not next week, but hey, somewhere in the next 6, 12, 18, 24 months, 3 years, yeah, I mean, we're here, and the world of robo taxis is here. So no shock. Then like, hey, people are being like, well, let's start to, buy into Tesla stock, make it quiet. And the second part of this live stream is that's important, obviously, for Tesla stock, but it's also important to like the whole growth sector, right? Because Tesla is arguably, along with Bitcoin, the captain of the ship of growth stocks. Now, many people don't think of it like this, but I mean, the stock market sort of like moves in sort of like waves from one group of stocks to the other. I mean, until sort of like March of 2021, everybody was like, oh yeah, all of these innovation stocks, we can't get enough. The future's so bright. The growth is endless. We can't pay, it doesn't matter what you pay for it. It'll all work out. And then suddenly the mood shifted onto all the other things, the big tech stocks, all the safety, and stability stocks and dividend stocks. And now the wave is once again shifting. And Tesla, yeah, it turns out is like the marker, right? They represent the marker. They are the captain of the ship. They are the leader, right? And so if Tesla's going up, then you know what? Money will start to pour into, whether it be hedge funds that are pursuing growth strategies, mutual funds that are pursuing growth strategies, ETFs that are pursuing growth strategies. That money comes in and it will start to obviously buy Tesla. It will start to buy Coinbase. It will start to buy Square. It'll start to buy Exact Sciences and Moderna. These are all growth stocks. And now you'll start to see bids form underneath all of these stocks where, where you want to get in, you'll end up pushing it up. And why? Well, most people don't think about it because our psychology is very geared to wanting gains, right? And the moment we don't have gains, we want to throw those stocks out of our portfolio and go and chase the stocks that will give us gains. But when you sell, especially at the very lows, who's buying? Certainly you're selling, right? And most people, individual investors are very price and psychology driven. They're not asset driven, right? But every stock represents a price, which is very much about giving us, the satisfaction of seeing like the price go up, our counts rise, and hey, we cheerlead that price. And that's all great, sort of like in the in-between, between sort of like the beginning of bull markets and the end. But at the extremes, you really want to think about assets. Because why? Well, that's where the dealers, the insiders are operating, right? I mean, they have a very strong awareness, of what is high, what is low, what is cheap, it's expensive, what is going on in their business, and they are accumulators of assets when prices are low, just like they are distributors of assets when they are high. It's not like the perfect high or the perfect low, but they're like, hey, relative to the business, these are the prices where you want to go. So yeah, in terms of the world of asset prices, we have gotten now in the world that we focus on at ATG Digital. I call it OGI, opportunity, growth, innovation. Crypto, is in that basket. We've gotten to the point where, yeah, I mean, our companies, our stocks, they got hit hard, and it's almost 3 years. the arguable reason for that is that, many of them did not produce profits. So in a world of 5% interest rates, it's like, well, these is profitless tech, all these things. But you know what? They've spent 3 years changing, right? They are now absolutely focused on profits, focused on free cash flow, operating cash flow. So they've cut employees, they've cut projects, which are too far out into the future. They're focused on, their core business. So growth stocks, they're ready. I mean, they're ready. And the economy is in such a place where, this is the way I put it in my silver tier update today, which is that it's too hot, generally speaking, to cut interest rates, right? And it's too cold to raise interest rates. In that environment, we're going to continue to see decent, but not terrible and not incredibly exciting economic growth. We're going to see inflation. I doubt we'll get underneath 2%. We'll run hot some quarters at 3 or 4 or maybe 5%. Some quarters will get nearer to 2. In other words, we're in this in-between world where legacy companies are going to be really stuck. They're going to struggle to generate growth. And you can see it today if you look at results for the last quarter. So many legacy companies, 2% growth, 3% growth. And then there is the effect of interest rates. Now, I've read a lot of research and shows that once interest rates go up, you really begin to see it on profitability. And these companies, they depend on the bond market to borrow. So, they have gorged at the trough of 0% interest rates, very low interest rates for, 14 years or so. Yeah, they got to produce, extra money to pay all those coupons as they refinance, and that is shrinking profit margins. Meanwhile, our companies now, having right-sized themselves, having pivoted to producing not just sales growth, but profits, free cash flow, operating cash flow, their growth is whatever at 10 or 12 or 15 or 20%. They're 3x, 4x, 5x, whatever else that is out there. And the critique that they don't produce, cash or and they dilute their shares all the time. Yeah, there are still a few companies like that, but the big signature ones like Tesla, they make money, and other ones like it, they're all now spent, the last few years right-sizing themselves. You can't throw this critique at them. So the final aspect to this is that over 3 years, where has, I don't mean this derogatorily, but there is a herding element to markets. Where is sort of like the herd travel to? Well, they've traveled to the big tech stocks. That's why you have words like Mag 7 and all this stuff. And then they've, go look at like the S&P 500. It's dominated by, I'd say, a maximum 100 stocks. It's very big stocks in general, dividend stocks, safety stocks like Berkshire Hathaway and all these. That's where everyone is. And at this point, the demand there is pretty much sated. Who's going to come and buy whatever, another 3 or 4 or 5% and pay 30 times earnings for a company that's growing at 3%? And trading for 12 times sales, something like that. Professional investors, they are willing to go with a bid up to generate performance gains, but they're not that dumb. And you do need big investors that are willing to take large stakes to kind of like suck in that float and make it scarce enough so that the next buyer coming in, bids the price higher. They're not that dumb that they're going to pay like 35, 40 times earnings, 7 to 12 times sales for companies that are growing at 3%, 4%, where, they've got researchers that are, can look at the profitability of these companies and be like, with interest rates at 5.5% or 6% for them, and coming from 1 or 2%, there's going to be shrinking profit margins. They're not dumb. And they can equally see what I'm telling you about growth stocks, which is, in other words, they're set to grow, not just sales, but also profits, and that they are cheap. They're cheap in terms of cash flow. They're cheap also in terms of the fact that nobody owns it. And who owns it? Well, it's our new best friends, the dealers, the insiders of Wall Street, because at very low prices, they were the only buyer. As you wanted to throw all the growth stocks like, this stock is down, it's got smashed, it got destroyed. Here, take it, take it. I don't really care how great their technology is. I don't care how good their product or service is. I'm done. I want experience gains. And the dealers say, yeah, okay, yeah, you're in pain. Okay, give me your shares. I will take it from you. And then, yeah, when the markup begins, and I talked a little bit about this, which is how do get stocks really get marked up, right? And it's like, what is marked up? Because we think in terms of going up and going down. But if you're a dealer, right, and you have inventory, you have merchandise, and you want to see it bid up, well, you can see when the demand comes in because if you want to buy a large amount of Tesla, of Block, of Coinbase, well, it's not like you can walk around the streets of New York and be like, hey, you got any Coinbase? Hey, you got any Tesla? Hey, you got any Block? No, you got to call essentially, the big dealers, right? And be like, yeah, I want a block of 2%, of this. And then, and they'll pretend like, oh, we don't have any, you want 2%? So it's like, they're like, well, we're going to have to like show your order to the market in some way, shape, or form. And so the market sees like, oh, big buyers. Yeah, I mean, and what do you naturally do? You'd be like, well, I'm not selling to you for what the price was yesterday. I want 5% higher. I want 10% higher. This begins the markup and the bid up. And that is deliberate. That is called market operations. And it's not talked about. It's not taught in any textbooks. But if you read, I'm going to throw this book again, books like this, right, that go back to the beginning of Wall Street, right, the beginning of the market. Yeah, I mean, those are the tactics that they use to get stocks marked up, and where insiders, use all of these tactics. Insiders meaning people within the market, within the companies. And that's what I believe is beginning with growth stocks. And Tesla, being like the captain of the ship, as I put it, and Bitcoin being, sort of like, in crypto, sort of like the other captain of the ship, which also just like, it's the same set of investors that are in Tesla, that are in Bitcoin. In other words, money is pouring in. Yeah, and that is going to just bring money, and it's going to start to lift the prices of a lot of different companies that are in this OGI sector, opportunity, growth, innovation, and crypto sector. And before you know it, yeah, it's like, oh, all the cheap inventory, all the cheap merchandise, all the low price inventory is gone. And, like Coinbase, Coinbase was at what? $30? Was it $30? Like literally last year. It's now over $200. And what? It's going to set up to go to new highs as Bitcoin goes to new highs. So, yeah, it is definitely setting up for a reversal. In other words, people really anticipated that growth stocks were in a hard smash, sort of like what happened in the year 2000, where these fake companies called dot-com companies, and then there were a number of tech companies that weren't fake, but got to 50, 60 times earnings. Cisco, I think in 2000 was trading for, I think it was 60 or 70 times earnings. But that kind of valuation mess is really in like all of those categories of companies that are mostly legacy companies and or just incredibly hyper bid up companies that are in the S&P 500. And the last thing that I want to say about that, in another time, the way that prices reset is that or a crash somehow happens, orchestrated, whatever you want to put it, manipulated. Maybe it just accidentally happens. I no longer believe that. I'm pretty sure like everything is kind of set up in a certain way. And that's the way you get asset repricing across the board. However, today, because the nature of markets in general and the stock market in particular, which is that you have so much more individual investor participation. I saw an amazing stat that 15% of all of the investors in US stock markets are joined somewhere, really began investing in 2020. So there's huge retail participation, which changes the structure of markets. So That means that, it's a little bit harder for Wall Street to run like a narrative to reprice all assets so they get to accumulate everything on the cheap. Yeah, I mean, it's a little bit harder. It's also much harder to get people to sell just because you push the Dow down by 10% or the S&P 500, because people are also no longer as sort of like mono-programmed to get their narrative from legacy media, whether it be CNBC or the Wall Street Journal or Financial Times or New York Times. Instead, you've got like all these different information sources, Substack, Reddit, X, to some extent Instagram, Facebook. There's Discord, there's Telegram, and so it's much harder to run a central narrative. So as a result, if people are interested in whatever cannabis stocks, you can have whatever the Dow do, whatever it's doing, and yeah, you'll have some effect, but the folks are in their own little universe, and they are going to keep buying whatever they're buying or selling whatever they're selling. And so it's much harder to kind of like run a central narrative. And as a result, you've seen even on days, for example, like on Thursday last week, Apple stock, right, was marked down by 4%, right? 4%. And pretty much all the big indices were higher. I had to literally stop and look at that like, whoa, look at that. Yeah, Apple, which represents like nearly 6% of the S&P 500, it's in the Dow, it's in the NASDAQ 100, it's in the NASDAQ composite, and large amounts, right? 4%, right? And still these were up. Why? How? Well, because obviously some of the other bigger names were not, being bid down, not marked down. But there had to be as well a lot of smaller names that people just like, well, Apple down 4%. What does that have to do with anything? I'm going to keep buying whatever I keep buying. So the world has changed a lot in terms of how markets are constructed. And so, we've got a transition unfolding where previously you would need a crash for all assets to reprice, but that's no longer true. And we're seeing it now. In other words, people are moving from those big tech stocks, big stocks in general, dividend stocks, safety stability stocks, and they're moving into growth. They're moving into smaller cap stocks. They're moving really a lot into our stocks. And obviously that's great for us. So a 3-year normalization, process, whatever you want to call it, looks to be ending, maybe ended. And if that's right, then second half of this year, we're really going to start to see money starting to chase many of the stocks that are in the ATG digital model portfolios higher. We're already seeing some effect on it in biotech, obviously crypto-related stocks. We've seen it in a fairly big way. I have noticed as well, new energy stocks, alternative energy, whatever you can call it, those stocks are finding bids and others are bottoming out process. In other words, it does look like, the slate is clear and there's interest that is coming and willing to buy the low price inventory. And the dealers will be like, oh yeah, we see that. Okay. So they'll take the last of it in, and then you're going to start to see markups across the board. So where are the near term opportunities? Well, let me put some of these up and talk about them. Tesla, as I said, is the captain of the ship. So, I mean, you've got full self-driving. That's a big deal. People will start to speculate in social media and even legacy media about full self-driving, robo-taxis that will drive interest into Tesla. People will start to focus on price targets from Kathy Wood and others, $1,000 or $2,000, the size of the full self-driving market, the size of the robo-taxi market. And this will bring people in, and because people are already a little bit primed for this because of their interest in artificial intelligence, because this is really a very demonstrable form. Like we had ChatGPT, which kind of like excited people, but this is huge. So what's the next, then from there, Tesla, people's like, well, what else can I buy, right? I mean, I want exposure to this. Well, Mobileye makes, a lot of the chips for self-driving for everybody other than Tesla. So that's a natural place that people will sort of like look to. And they actually reported and said they're seeing, some good signs. This would very naturally morph into as well, uh, uh, interest that goes into something like Wolfspeed, which makes EV power chips, and then very naturally go into EV stocks in general. Now, many people will be like, "Well, what about Lucid, Rivian?" I'm sure some of those would do well, but those all have to scale up in a very big way. And given that I went through holding Tesla in the portfolio as Tesla tried to scale up the Model 3, yeah, once bitten, twice shy. Yeah, that's it's a very, very difficult process, so much money. So I'm gonna stay away from there. Instead, I'd say, the China EV sector is like I mean, they are growing gangbusters, obviously in China, but then also in Europe, where yeah, the legacy automakers, yeah, I don't know if any of them are going to make it. Instead, China has bought up all these brands in Europe and using these old brands like I'm trying to think like Austin Morris or something like that. Like, but these are Chinese made EVs, right? And so XPeng, from my judgment, has like the most stylish cars. They look like China's Tesla. So that's one that is in our silver tier portfolio. Mobilize in the silver tier portfolio, and Wolfspeed is in our gold tier portfolio, which is our sort of like mid cap to higher end small cap portfolio. Other places. Well, I talked about Coinbase. Yeah, I mean, Bitcoin is now at about 70,000. The old high was 69. So in previous halvings, there has never been an occasion where Bitcoin has been above the previous high at halving. So I think we just crossed like $50 billion worth of trading. In other words, people are trading like crazy. That's great for Coinbase because they generate a lot of revenues off, trading fees, bid and ask spreads. That's great for them. And, they're starting to get approached to the old high. And in my opinion, in my judgment, and remember, this live stream, not financial advice, not investment advice, no guarantees, no certainty, but yeah, they're going to take out that old high. And then it's going to, go to new highs from here, and who knows where where Bitcoin will go, and we'll take crypto with it, right? And that means like all those crypto tokens will start trading. It's huge amounts of revenue. People are going to look forward and anticipate that and start to bid Coinbase higher, and that will start to go into all of fintech. SQ is Block, which is in our gold tier with Coinbase, but it will take Robinhood with it. It will take PayPal with it. It will take a lot of the fintechs with it, because stocks tend to trade as a group. And we've got a number of these, obviously, in silver tier, in gold tier. That's where they're mostly like in the mid cap to higher end. Small cap, that's where in there. In my silver update here, I also mentioned what I call like, digital stocks, right? There's so many transitions going on today. The world of advertising, for example, is now increasingly really dominated by digital. The world of linear TV, in other words, old school TV, sit down and watch, by appointment TV, is effectively dead. Most people today, are really getting their media consumption through streaming. Yeah, and what is that? I mean, so that's a mixture. The gateway through that is Roku. And then in terms of like, the advertising, that goes through Trade Desk. They represent like two different kinds of monopolies on two different sides of this media equation. And yeah, after a couple of 2-3 years where, yeah, these companies, yeah, have just really been, their stock prices have been decimated, still they represent, a future. And with advertising now, having made that shift, but it's not recognized in Trade Desk stock. I mean, what Trade Desk does is essentially allocate inventory of, like every website, every streaming provider, to the extent they sell advertising, that space is sold through Trade Desk, and it's bought and sold no different than the way stocks are bought and sold. And Trade Desk is the central point at which that happens. So as digital advertising money comes in, because even though digital advertising is where the eyeballs have been for a few years, advertisers have continued to spend on linear TV well above what it's justified by the numbers, because that's been in decline for 3-4 years. But now they're beginning to move their spending over, and that is great news for Trade Desk. And equally, that's streaming goes through Roku, right? I mean, anyone that has a TV pretty much is using Roku. They are the default, which is and they are the gateway, right? So everyone's got to go through there, and they are the gatekeeper. They're like a toll booth. And Roku's stock has gone nowhere, even though the prospects for its business have always been incredible. It's just that, obviously in 2021, the price got very high, and at that point, sellers came in, and, nobody wanted to hold a stock that was going down. So it had to get to where it is. But if I'm right, second half of this year, early next year is going to be like fire for these stocks. Let's see. Is that it? Yeah, that's the ones that I have. So things are looking good, in my judgment, in my opinion, for the growth sector, for crypto. And this, I don't know, winter for growth, for crypto, in my opinion, my judgment, it's over. It's over. Tesla marks it. The fact that full self-driving, cyber truck production, there's, robo taxis, these represent real tangible things that people can put forecasts, estimates, judgments on, which will come and bid it up. That drives money into the sector. You've got, again, a second catalyst with Bitcoin carrying crypto, which takes an entire group of stocks. And then I've talked about biotech. I don't want to talk about here because, you can check last week's live stream where I went into a lot of biotech in great detail, and I've done that a lot. So, but that's another sector, obviously, where you can find, in my judgment, stocks that are going to be subject to markup and bid up. Okay, let's do questions here because I'm at the 46-minute mark. Pulverizer says, has liability been settled? If your self-driving car crashes, is the car responsible or is the passenger? At this point, the car is still, when you go into full self-driving, it is beta. So you're still responsible for the car. So if you allow the AI in your car to go and hit somebody, hit a piece of property, you're still responsible. Now, I imagine that, this will get fought out in the courts and, and everything else, and it will get settled and figured out, and maybe it will require some new laws, new legislation. Either way, technology moves forward in some way, shape, or form. At this point, though, we still have the old laws and old ways of doing things. And remember, Tesla is in the insurance business in, I believe, 12 states. And if I'm right, if you take their insurance and if you're on self-driving, most of the time, they'll give you a break. And so they're vertically integrating themselves into every aspect of this. And so they will control some of, what unfolds, especially if, they have a monopoly on these robo-taxis, which the rideshare companies are going to depend on. So Tesla is going to be very critical pretty much to the market, to what goes on around transportation. Raul says, hey, Paul, I want to know if you've heard of AMTX and what are your thoughts? I have to say I can vaguely remember the ticker, but nothing is coming to me offhand, so can't tell you anything about it. Also, Fannie and Freddie keep going up. Are there any news that's just speculative? Well, I'm not sure if you're the one that asked me last time. I mean, it's not speculative in the sense that Fannie and Freddie have been under government conservatorship now for nearly 16 years. I think September will mark 16 years. You can argue for whether that conservatorship was right, whether they should have ever been done. Then there was the net worth sweep, which was implemented in 2010, which definitely by my, I'm not a lawyer, by common sense judgments about property and law, would seem to be illegal or would be unconstitutional, would be the right word, unconstitutional. And then there is the argument really that, these companies, they're operating companies that have effectively together, Fannie and Freddie have 75% market share for something that's critical to the United States housing market. They cannot operate permanently under conservatorship. Why? Well, at some point, they probably need to lever up their balance sheet. They also need additional capital to make sure that, in the future, they don't, need the US government to do anything. Finally, operating under government ownership, conservatorship, they can't necessarily attract the talent that they need, make the investments that they need as a company. So I would actually say I believe it's just a reckoning that is overdue by the political system that, hey, these companies which were taken in under a very different time, under very different circumstances, that there is sort of like this murmur going on in Washington that these companies are going to be set free. Some people will argue that it's because Trump is the leading candidate in the Republican nomination. Other people will argue it's because the Democrats, in case they lose Congress, they have always been in favor of Fannie and Freddie's affordable housing mandate, that they want to lock that in. Somewhere in between all of this, I believe, is the answer. But I do believe that this time around, in my opinion, my judgment, it's for real. Why? Because there's no single event it's going to be this judgment from this judge. I mean, there are people, highly focused on court cases, but I believe it's actually the thing that it's just overdue. I mean, these companies need to be set free for them to operate as regular businesses. And in my opinion, that's not an if anymore. It's a when. And I believe that, it's going to happen, all likelihood, probably before the election. I mean, I'm going to put myself out there. And if that's right, then, yeah, these companies do not trade or are valued anywhere near Citibank or JP Morgan or equivalent businesses like Radian and others, which trade for, some multiple of their earnings, some multiple of their book value. I mean, these would trade for, 10, 12, 15, 20 times, where they are. Obviously, me saying that is speculative, but I've been in the Fannie Mae, Freddie Mac trade since 2008. I bought my first preferred shares in 2008. And I've been waiting. And this is the best, most sort of logical, unemotional, the most common sense, bid up that I've experienced in my 15, 16 years in it. So in my opinion, it's not speculative. I believe that this time it's going to come through. And if that's right, then, I've talked about this reverse waterfall. How high could they go? Well, the Fannie Mae and Freddie Mac are much bigger businesses than when they were in 2008. I mean, why? Because the economy has grown. The housing market has grown. So these are much bigger businesses. So, what are prices that it could go to? Well, depends on exactly how they unfold, but I don't know, 20, 30, $40. You can go look at those charts and multiply it by the number of shares. Now there's, things to be worked out, like what will the government do with its preferred? And, will they give it up? Will they, give some accommodation for all the money that these companies have given them? I don't really know all the details, but I imagine that when you see a persistent bid underneath two illiquid stocks that have been, left for dead for 16 years, that trade in the over-the-counter market, and there is a persistent bid, my general view is that somebody knows something, and this is what is going on. And you will find out after it's been bid up to, I don't know, maybe it's 15, maybe it's 12. It's oh, here's the news. But that's my view. That's my viewpoint. Harrison Smart says, what's the target price for Goldfinch? I believe we sold that out of the platinum tier trading portfolio yesterday. So we don't generally set target prices. What we try to do is try to find in crypto, essentially we look for things where we can see there's obviously a buying interest in a certain category. And what we have seen is that generally there is just a lot of interest in decentralized finance solutions. And Goldfinch is one of them. Maple is another. So, when we see right now, the trade is as much on illiquidity. In other words, not a lot of people know a crypto like that. So when, somebody even puts, I don't know, I'm just guessing here, few $100,000, it can just absolutely shoot, the price up because those crypto are quite illiquid, but we don't have formal price targets. Bruce says, "Thank you, Paul, to you and your team. Thank you for sticking with me and our team." David says, "I continue to miss this live stream. Does it start at 12:30 every week?" Unfortunately not, because my schedule on Tuesday varies. For example, this Tuesday, I have to record the silver tier update and then come on and sort of like at least script out what I'm going to plan for it. So some days, truthfully, it's a little bit later. Sometimes it's a little bit earlier. I would love to set it for a time every week. Unfortunately, depending on what is going on in the markets, what is going on at HEG, it varies. I'll say the earliest we've done it is 11:30. I think the latest I've done it is somewhere between 1:30 and 2. Sorry that I cannot commit to a specific time every week. Fishing the Mountain says, "In the past world wars, gold seemed to be fair, okay, as a flight for safety. Do you think Bitcoin would fare well if another world war started?" I mean, that's a. I mean, without being like a doom monger, I mean, generally speaking, if a world war started, the anticipation to the war would generally make people want to shed risk, and it's unclear if they would shed Bitcoin as well. And people generally want liquidity, which is cash, irrespective of however people perceive a certain asset. And then once the war starts, generally, then it becomes clear that the governments are going to flood the markets with money, that they are going to spend a lot of money on arms or whatever it is, and then markets tend to lift. So I don't know if that's an answer. I think that general human tendency to want to sort of like, in anticipation, sort of like dread the actual event, the beginning of the event. And then after that, prices start to like reflect the fact that, oh, we're going to fight a war. This is what it's going to be. Here's who benefits here. And then into that, I mean, generally wars are inflationary. Governments tend to print more money. So that would be my answer. David says, "About Fannie and Freddie back at Banyan Hill years ago, finally green again. Do you foresee World War III?" Oh, that Pulverizer is asking, fishing the mountains. Joanne says, "What Fannie Mae stocks are you watching?" Well, these are in our gold tier. We own the common, which is David has FNMA and FMCC. And then we also have the preferreds, which are a different way to play it. The preferreds have a par price of either 25. I think some have a price of 30, and then there's 50. And in success mode, they would go back to their par price, and potentially some of them that have variable rates might even trade at a premium, because if they went back and started to pay the dividend again, now they would be, they'd be valued like bonds, and they would pay their coupons of whatever, 4%, 5%, 6%. I think I have a preferred that has a coupon of 6 and 7/8%. And hey, I bought a lot of those very early. If they paid off, it would be great. But we've got 3 preferreds, I think 2 Fannie Mae preferreds, and 1 Freddie Mac preferred in the gold tier. So if you're looking to see, and get ongoing coverage of Fannie Mae and Freddie Mac, then subscribe to the gold tier, where, I mean, I've been telling people to buy because my general view is that I believe that 2024 is the year where this, I mean, it's a gut sense, it's an intuitive sense. I believe that this is the year, for whatever reason, this is going to unfold and happen 16 long years later. It just looked like that. All right, I believe no more questions. I want to thank all of you for showing up for this live stream. As I said, generally between, I'm going to try and keep it 11:30 and 1:30 at the latest. Joanne says, with State Street and the rest becoming involved in real estate, what effect might... Well, I mean, State Street is a custodian. They're not involved in real estate per se. What they do is they have ETFs, and they obviously custody assets. I mean, these are all part of the legacy financial system that, yeah, has various different problems that I've laid out, which is that, well, they've invested in reserves that have gone down. They're exposed to commercial real estate. State Street, though, is a much more of a custodian, and a lot of their revenue stream really depends really on custodying ETFs. Blackstone. Yeah, I mean, but Blackstone is a very, very diversified business. There are a lot of things that get a lot of attention in social media, but you do have to go and see and look at these businesses and say, well, that's a small part of their business. I'm sure some Blackstone funds will be in trouble with commercial real estate and others, but it's not something that, is 100% of their revenue. So these are very, very large companies that are very, very diversified in many ways. And people will focus in social media and say, oh, XYZ is doing this. So I would say you need to have a sort of like a wider look into these companies rather than thinking that like any single risk or opportunity, is a problem. And I will generally say what I've said, which is that in my opinion, in my judgment, there is far too much cash floating in the economy, in the financial system, for there to be an enormous crash or some, general, some problem like many people are thinking, whether it be with commercial real estate or anything like that. There's just simply too much cash. For a crash, you need leverage and you need someone that is under pressure to sell assets now and take a low price, which triggers like, margin selling across that asset class. We just have so much money that is just sloshing around in the financial system, which is why I believe that, we're just seeing this market, which is unusual, transition from one set to another set of assets, going to what's cheap, going to what can be bid up and be marked up. All right, I'm going to say goodbye here and say, hey, thanks everyone for joining me on this live stream. I'll be back next Tuesday, somewhere between, I'll say, 11:30 and 1:30. So check in, subscribe, hit that notification so you know when I'm on. Thank you, everyone, and goodbye.